Hi guys, welcome to the honeystocks.com halftime report for the 20th of November 2019. Now, it's been quite some time since I've delivered one of these. I know that they are super popular. I think it was around a month ago that I did my last midweek social media analysis. So hopefully you get a bit of insight to the stocks that I'm about to walk through. As always, everything is completely backed up with technical analysis. That's what I'm widely known for. So hopefully, as I said, you get a bit of insight from this. Please pause the video. Make sure you're comfortable with that. There's not any investment advice here. This is just analysis. The interpretation of the data is completely down to you, and I assume no responsibility for any of you that may wish to act upon any of these charts. Now, to give myself a little bit of credibility, most of you already know that I'm registered with the CMT Association. I'm working my way towards my chartered status at the moment. A lot of you, especially in the last couple of weeks, despite the fact that the market has obviously had a massive run to the upside, there's a lot of you that are continually stepping in the brown stuff. Now, if you're one of those individuals, you can maybe stick around for a couple of minutes at the end. There may be one or two things that we can do to help. But please do subscribe to our channel. In the bottom right hand corner there, you should see a little subscribe button. Like I said, we try to upload every week, every 2 weeks, try and give as much insight to the stock market as possible. We also have a big announcement. We have a big Black Friday offer. We're getting it out there early. So what we're doing, as well as all the good stuff that our premium members receive from us, for those of you that sign up, the first 20 of you to sign up will also receive full access to our technical analysis program, which is massive. So at the end, there's going to be a link down below for you to register your details. Like I said, the first 20 of you to sign up, we will provide access to our technical analysis program. But obviously it requires sign up to our premium service. So, bear that in mind. Now, obviously I'm Sam, and like I said before, I'm registered with the CMT Association, just to kind of introduce myself a little bit. But here we go. Let's get into the charts. Now, first up, I want to just quickly touch on the rotation graph. Now, I think it's very, very clear that when anybody is looking to initiate positions in the market, we want to be identifying where the strength is, or where the strength is moving to at any given time. It's not about beating Wall Street, it's about learning to play alongside Wall Street and following the money flow, flowing where the money is moving to. Now, I just want to highlight a couple of things to you. Now, we can clearly see that energy is starting a bit of a decline. It had been improving recently, but energy is starting to decline. Biotechs are now starting to move into the improving. Now, the theory behind the rotation graph is that the sectors move around in a rotation, which is why it's called a rotation graph. Now, it's very, very clear that doesn't always play out. We sometimes see areas that look like they're about to move into a leading sector and then they fall away. But by and large, if we're identifying the strength in the market and we know where to look, we can say with reasonable certainty that there's certain sectors that will generally perform better than others. Semiconductors has absolutely been a place that you'd want to be over the course of the last few months. Absolutely. Financials have been performing very, very well. Some of our premium members have been doing very well in the JP Morgans, Bank of Americas, etc., etc. But this one is interesting to me at the moment. This is obviously First Cloud Computing ETF SKY, SKYY. Now, we obviously know that a lot of these software names have been beaten to death over the last few months. Now, what we're seeing, in my opinion at the moment, is we're seeing a rotation out of some of the areas that have performed quite well. Wall Street decides to just profit take and move into other areas. They rotate their money just as much as us. And we can clearly see that Sky, although it has been a lagging area of the market, clearly for the last few months, it's now starting to show signs of strength, which is good. Now, we've got the Dow Jones, nothing's changed. We've had a red day in the market today, nothing to freak out about. They happen. I see the headline of the day was something to do with China or Trump, I'm led to believe. I don't even look at CNBC or Bloomberg anymore. It's a waste of time. But certainly the Dow Jones has still broken out. We've still got a breakout in the S&P 500. We want to be long stocks in this environment. Now, just to go back to what I was saying, it's about finding the best stocks in the best sectors and the ones that are going to accelerate your returns, and that's what it's all about. So let's start off with Okta. Now, a lot of you have reached out to me about Okta, about the move that it's had. Now, this is actually a trade alert that I sent out a few days ago to our premium members, and obviously it's performing beautifully. We got the breakout around 120, 121, I think, and we're obviously pushing up against 130 at the moment. Now, the logical upside target here is 140, at which point reevaluation would occur. However, I think for those of you that are maybe looking to get in on Okta that are maybe not in at the moment, I think it makes a lot of sense to wait for a little bit of a pullback here, and then perhaps look to move in on any potential retest. Nike is performing well. Again, this is an alert I sent out to our premium members, and this is the target here that we're looking at, around $96, $97. If we get a breakout above that, I think we can expect it to move towards $100. However, I think if you're out there and you're currently in this trade, then this level here on a technical level makes a lot of sense. Now, obviously, I'm not talking to you fundamental guys that are obviously holding. I know that you have a different approach, completely respect it. But the technical approach would be, if you're out there, you would reevaluate your position upon a move towards that area. Now, Match.com, again, this is one that I get asked about quite a lot, and I'm just wanting to highlight to you why technical analysis can sometimes be a bit more challenging, and sometimes why it's just not worth the effort on some charts. And this is a prime example. I mean, if you look at that chart, there's just no way to tell whether or not we've got a breakout at the moment. Have we broken out here, or is this the breakout level? Or is this the breakout level? So when a chart like Match, although it might be a good company and you may want to be buying it, technically it's a very difficult chart to trade. When charts start to become incredibly complex and challenging, I just step away from it. It's not one. So for those of you out there that have been asking about Match, that's just my view. It's not a chart that I find terribly appealing just because of the complexity. I don't like complexity in my life, as most of you know. I'm very much about simplicity with my charting. PayPal, again, this may be interesting. However, the caveat to this one is I can see that there's been a major reaction after hours. I believe PayPal have announced an acquisition of another company. So that is going to have a short-term impact on this chart. Now, I've obviously prepared this chart in advance of that announcement. So how Wall Street reacts to that tomorrow, who knows? It seems to have dropped after hours, but that doesn't mean that it's not going to explode tomorrow. It's just a waiting game. And again, it's why I don't really pay attention to after hours and obviously pre-market moves unless it's aligned with earnings. So I think if you're out there and maybe you're looking at PayPal, I think on a technical level, I think you would be looking at somewhere around 106.50, 107 would be a logical entry. It goes without saying that if you see a complete meltdown in PayPal, I think this would be a logical level to reevaluate your position. Some of you, if it drops below there, I get it. A lot of you will just buy the dip, and that's fine. But again, speaking on a technical level, that is the danger zone for me on the PayPal chart. For those of you that reached out to me in the last couple of weeks regarding Goose, I know a couple of you had puts on this after I highlighted it a couple of weeks ago. So congratulations to those of you that have done well on that. I think with Canada Goose, very, very clear again. There's another important level coming up here. I think if you get a breakdown below this level, around $32, I think you'll probably see a bit more distress selling there. So it's not an environment where I would be looking to kind of buy the stock. I like a Canada Goose jacket as much as the next guy. I own a couple of them, but for me, it's just not a stock that's appealing anymore, unfortunately. Novacure. Now, Novacure is obviously broken out, doing very, very well. This was highlighted in our premium weekend analysis just this past Saturday, and quite a lot of our guys are doing very, very well on this one with call options and obviously buying the underlying. But for those of you that are maybe looking for a position in NVCR at the moment, it does have the look of being a little bit overextended at the moment. I think there's a very clear upside target of $100. But I think if you're looking for a new entry into this one, then absolutely, I think you can maybe buy any pullback that you may have. But if you're out there in NVCR, in an advancing market, I don't really see any reason why it wouldn't advance towards $100 over time. I think you could absolutely expect a pullback or two along the way, but ultimately I do feel like it will go towards 100. EHTH is close to breaking out. Cup pattern. I don't know many of you that maybe follow Bulkowski, but I would highly recommend that you go and check out his work. But this is a favourable chart pattern, and this is a level that I think warrants a lot of interest with EHTH. I think there's a good 36% upside potential with it if you get that breakout. There's a bit of room for things to move on this one, and it's going to be interesting to see if we get that breakout followed by the continuation that we need in order for price to really start gathering a lot of momentum. Disney I've been asked about a lot. Now this one is a poster boy for Fibonacci. However, with that said, I think we do have to clear this mental hurdle of $150, a significant round number barrier. I think a new entry would be logical above $150. I don't really see the point in buying it at 146 because there's no guarantees that it'll get over this hurdle. Yes, it's a great company, I understand that, but for me on a technical level, I think above 150 it probably makes a lot of sense. Netflix, again, everybody that keeps asking me about this one, please build this into your chart. I can't keep going over this chart every single analysis. It's in a sideways grind at the moment. It's obviously in a triangle pattern. There's nothing that you can do about it. It's going to take time for this to resolve itself. Ultimately, yes, I do see it moving towards the upper end here, around 360, depending on when you get there, 350, 360. But for new entries, unless you've got an entry down here, it doesn't make a lot of sense. For me, this is now trading in the middle of no man's land. I think you could put your money to work in better areas, and that's my view on Netflix. Activision Blizzard is still in a sideways range. It's a 10% range at the moment, so I think we're only a few bucks away at the moment. I think if you can get a move above $57, I think there's the potential for this one to really start to move. We're in a bullish momentum range. That's something to highlight at the moment. So I think the breakout there is something that I will be watching with a lot of interest on Activision Blizzard. Micron Technology, again, it's a bit of a waiting game for those of you that have been asking. I think it's certainly a case of just getting above this hump at around $51. We're currently in the middle of no man's land at the moment. it's not an environment where I would really be looking to, I suppose, buy the stock. And as I look at this, literally as I'm doing this analysis, I'm actually just wondering if there is a bit of a pattern here. Yeah. So that'll be interesting just to kind of see if that really holds true or not. Yeah, potential head and shoulders pattern for those of you that don't know technical analysis too well. So yeah, certainly for me to be comfortable with that, I think above $51. And as I said, as I've just highlighted that head and shoulders pattern, that should give a little bit of caution to those of you that are maybe out there holding. Alibaba, very similar to Netflix at the moment. I think we're obviously in this very clear triangle pattern. A little bit of patience is needed here. I have many of my clients and premium members have been discussing this one to death, and they are primed to move on this if we get a breakout with continuation. But remember, weekly charts, the candle only completes on a Friday. Jumping in early, midweek, when the candle hasn't completed is a problem. So absolutely bear that in mind. AYX, a couple of you have reached out to me asking about this. Yeah, it does look like we've got a little bit of a breakout here in AYX. Just to kind of go back to what I was saying at the start with the rotation, with obviously the cloud-based software tech names. I think AYX certainly makes a lot of sense at the moment, but I think for this chart to really hold true, I do feel, between, on Thursday, Friday, I think we need to get continuation on this move. I think if we get a decline tomorrow on the back of adverse news, China, etc., I would probably reevaluate my thesis on that. So although this chart does look like it's broken out at the moment, it would be a message of caution just to the overall market, which I do feel like is due a little bit of a breather at any moment. So you have to understand that the market doesn't keep going up forever. We do have to have a bit of a pullback here. So it's simply a case of just managing risk. Guardant Health, again, there was a chap that reached out to me, I think, on Stock Twits with this one, and I like it. I think the chart itself, when you look at it, isn't massively appealing. I mean, there's so many better looking charts out there. However, when we evaluate something on a technical level, what we're generally looking for is we want to see momentum followed by clearly defined pullbacks to a logical area of support. And for me, this is something that GH has demonstrated. So I think for me, I think the thesis, in my opinion, would be bullish above this 200 period simple moving average. I think that would make a lot of sense. Again, though, it's not a chart that I would probably actively seek out, but asked my thoughts. They're my thoughts. CHGG, I don't particularly like this one. Yet lots of recent strength. Fully accept that. I think it's not really a technical play. I think if you've bought this chart, it's probably because you like the company or there's something with the company that you like, and I accept that that's a valid way to invest your money in the markets. I think for me though, I think it would make a lot of sense to just keep an eye on this level here. I think if you get a move above that, certainly it could potentially offer entry, but again, the charts that I've gone over previously, are far better looking, and I guess that's just my view on CHGG. Roku is, what can we say about Roku? It's interesting. It's an interesting stock. Obviously, high momentum stock, and this just seems like a logical profit target. So for those of you that are out there, obviously it's had a lot of you running through hoops, jumping through hoops, rounded bottom, bear flags. It's had it all. It's not a stock for the faint-hearted, but I'm sure there's a lot of you that are watching this that have been rewarded very, very well. And I tip my hat to you all, because it's not a stock that I would want to be holding just for the volatility and the stress that it can often bring. Asked my thoughts on it. I think a profit target of 175 seems logical. That's just the technical view. It wouldn't surprise me if we've seen this at $300 next week. But that's obviously just me making a bit of a joke. It's one of those stocks that you absolutely need to have a strong stomach to hold. Those of you that are maybe call options, etc. I'm sure they're very, very profitable. The volume on this stock is just insane, and I think this is the level to kind of keep an eye on next, that would be my reevaluation point. MGM stock looks like it's potentially breaking out now. Not all breakouts are created equal. That would be the first thing to say. There's a couple of things with this that are perhaps giving me a little bit of a concern. However, I think with MGM, we are above resistance. That's not a bad thing. So provided it can stay above that level here around 31.50, certainly above $31, I think you can be bullish on MGM. Is it a breakout that I would buy at this moment in time? I'm not 100% sure on that. I would maybe 70-30 on it. It's not. Whenever I post a trade alert to my premium members, I generally have 80 to 90% conviction on the trade idea. I think with this, I would put it somewhere around 60-70% on this breakout. There's a couple of little concerns. However, if you're out there, there's a logical upside there of about 20 odd percent. We also have Starbucks. I think this chart makes a lot of sense. Some of you will be aware that I sent a trade alert out to my guys down here around $81. Now, it started off really nice, but as it's transpired, and I highlighted it in my weekend premium analysis, that we had to be mindful of this level. Now, a couple of my guys have just profit taken, 4-5%, some cashed in their options. That's fine. But for new entries into this one again, I think you need to be mindful. I think a breakout here would probably be a catalyst for a bit of momentum and maybe some additional volume to maybe come in on that one. So I suppose that's it, guys. As I said before, we are running the Black Friday offer. So for those of you out there that are perhaps interested in joining our premium analysis and our community, having access to our ideas, our scans, obviously premium weekend analysis, we've got an incredible trading community now. We also provide charting requests, so if you need a second opinion on a chart, then we're happy to provide ours. And also we provide friend referral bonuses as well, so you can get paid for referring your friends to us. So as I said, you'll get full access to our technical program. And as I said before, I'm obviously Sam, registered with the CMT Association, and I run honeystocks.com, super popular website, well known for technical analysis. And I think for those of you out there that maybe do struggle, or maybe your understanding of technical analysis isn't maybe where you would want it to be, I think if you do want to come in and be part of our group, our premium analysis, I think the people that I can generally help are those of you that are maybe trying to fit trading around a career or a business, because we're not day traders. We couldn't think of anything worse than day trading. Our time horizon for our analysis is generally weeks, sometimes to months. If we want to be in a stock for 50-60% moves, you're not going to achieve that in a few days. So our time horizon is generally weeks to months. and it's a very consistent approach that has built many six-figure traders over the world. We've got 2 7-figure traders in our group now, and just many successful traders and investors from all walks of life. So if you want to be able to learn and not just follow others, that is going to be made available to you for the first 20 sign-ups as well. If you want to trade with minimal stress. And the very unique thing about what I do at honeystocks.com is I log every single trade idea that I post to my group for complete and open transparency. So for those of you that are maybe thinking, you might want to be coming into the group, you can go onto our website and you can have a look at every single trade idea that I've posted to my group. I have a code of ethics that I need to follow with the CMT Association, so I log the date, the company, the price that I've recommended, and how that has then gone on to perform. And you can make a judgment whether or not you feel like that is a good environment and a good group for you. I don't know anybody else that does this. 2018 was logged as well. I think there was around 1600% there. So feel free to go and check that out. I know that that's worth a lot of money, especially if you're trading options, because some of you out there are absolutely learning from losses. Some of you will be picking up free tips from YouTube and trying to learn technical analysis from YouTube. So if you want to accelerate your learning curve but also be part of a genuinely world-class trading community, feel free to register your details. Do you want to do it the old way, or do you want to learn a new way? That would be the final question that I would leave you with. But honestly, if you've stuck around to the end, from the bottom of my heart, thank you very much for watching. As I said before, don't leave without subscribing. Really appreciate you. Thank you very much.